we've just gotten so much positive news about crypto and stablecoins and tokenization, which all bleeds into Bitcoin as well. So I do think we're in this process of bottoming. I actually feel very optimistic about where crypto is going. I think it's going to catch up to gold. I think it's going to be a good end of the year. Government can't handle actual deflation, and that's going to be positive for all scarce assets. Bitcoin, I think gold's going higher. I think other scarce assets are going higher because I do think that a deflationary force is real, and I think the printing response will be equally real.
Matt Hougan begins with a simple but powerful metaphor for how market bottoms form. Instead of a single dramatic moment, he says it's like placing rocks on a scale, each new signal slowly adding weight until the scale finally drops. Signals such as whales starting to accumulate, selling pressure fading, and improving sentiment across crypto suggest that Bitcoin may be nearing that tipping point. Before we go on, please take a moment to like this video, subscribe to the channel, and turn on post notifications for more content like this. Every action helps with the YouTube algorithm and greatly supports the channel's growth. Thanks for your support and enjoy the video.
You know, I always tell people it's like you have to imagine a scale where you put a rock on the scale and it sort of tilts, and you put a rock and it tilts a little more, and you put a rock, and eventually you put enough rocks that it hits the ground, and that's your bottom. I think there's lots of indications that we're close to a bottom, right? So some of the indications are whales stopped selling, right? Actually, at the end of the year, they became net purchasers for large wallets and long-term holders. That's important. The futures basis shrunk to almost a vanishing level. And what that tells you is that there is no more space for people to paper sell their Bitcoin through option overlay strategies, which also has been one of the ways that people have been selling. So that's another important indicator. And then outside of Bitcoin, we've just gotten so much positive news about crypto and stablecoins and tokenization, which all bleeds into Bitcoin as well. So I do think we're in this process of bottoming. I actually feel very optimistic about where crypto is going. I think it's going to catch up to gold. I think it's going to be a good end of the year. Could it fall another 20%? Of course. But I'm for the first time seeing the sentiment shift and seeing people get much more constructive on the space. One of my lessons from the last year is that the 4-year cycle has a strong psychological grip on investors and is therefore reflexive. In other words, the reason I think crypto went down primarily was people were afraid of the 4-year cycle repeating. So they created it by being worried about that. That's probably still intact. People are probably looking ahead to 2027 and figuring it will be a positive year for Bitcoin. So I don't think the 4-year cycle is as strong as it used to be. I don't think the halving cycle is as strong as it used to be because the quantity of Bitcoin is lower that's being sucked out of the supply. But these things still matter. They matter from a behavioral perspective. And on the halving front, they matter on a supply perspective, right? There still is a reasonable amount of Bitcoin coming out of the ground every day that the market has to absorb. And when that falls in half, it's a lot easier for prices to go up. So I think those are also tailwinds for us, right? We're now in almost the tailwind phase of the 4-year cycle. We're in the tailwind phase of the halving cycle. We have a tailwind on a regulatory perspective. There's just a lot of positive things to point towards. I align with the soft version of Cathie Wood's thesis, which is that if you thought Bitcoin was going to be used for payments in parts of the world in a relatively near term, stablecoins have clearly co-opted that use case, at least in the short term. And that probably incrementally is a negative headwind for Bitcoin. On the regulatory and policy front, I think crypto is just honestly sort of too impatient, is my general view. I remember as soon as the election took place, people were frustrated that Bitcoin wasn't literally the first thing the administration did. It had to wait a week for something else to clear before we got things like the strategic reserve. And that's because the world is complex, right? There's a lot going on. And if you look at what the administration has done from a regulatory perspective on establishing the strategic reserve and at least not selling its Bitcoin, it is now true that it's focused on the Clarity Act and focused on growing stablecoins and tokenization. But I think you just have to think that they can only do one thing at a time. I don't think that means that other things like working on establishing the strategic Bitcoin reserve as a law are off the table. I think it's just they're focused on this thing. Maybe one more piece of context. In the early days when the administration was working on like the strategic Bitcoin reserve, the stablecoin people were frustrated that they weren't focused on stablecoins, right? And then when they were working on the Genius Act, which was stablecoin focused, the tokenization people and the DeFi people were frustrated that they weren't working on tokenization and DeFi. I think the right framing is they can only do one thing. And they did a little bit of Bitcoin, and then they did stable coins, and now they're doing tokenization. And I actually suspect they'll get back to Bitcoin at the end. Maybe I'm too optimistic, but I think it's just staying focused on one thing at a time. What I got wrong is I was focused on the new money coming into the market, which is institutional money, corporate money, government money, and it indeed did come into the market, right? ETFs and corporations bought $75 billion of Bitcoin in 2025. What I underweighted was that the majority of Bitcoin is held by people who have held it for a while. And they were really afraid of the 4-year cycle, and they sold about $100 billion of Bitcoin, right? And that was why Bitcoin went down last year, because 100 billion is more than 75 billion. And it's easy to be frustrated with those people, but you also have to recognize that they're human. They may have bought Bitcoin when it was $10 and they turned $10,000 into $10 million. And they have lived through a 4-year cycle before, and they've seen it go down 75%. And they're thinking to themselves, do I really want to take all of that risk? And so they didn't exit the market, but they sold a portion of their Bitcoin, either directly or by writing covered calls against it. And I think that's what we missed. We were all focused on institutions coming in, financial advisors, family offices, endowments, pensions. And sure enough, Abu Dhabi bought Bitcoin and Harvard bought Bitcoin and Morgan Stanley is running 500 miles an hour at Bitcoin. And all of that happened. But we forgot that like 70% of Bitcoin is owned by individuals. And some small fraction of those, maybe 10%, decided they wanted to sell or trim their holdings. And the institutional money can only come in so fast. And I think that was the difference. Ultimately, the professional money wins out because it's so large. There's so many trillions. But it's like a bucket, right? It matters both how much water is coming into the bucket and how much water is going out. And because of the 4-year cycle, I think people took a little bit of money out of the bottom of the bucket, and that's why prices retract.
One of the major surprises of the past year involved the interaction between institutional demand and individual investor behavior. On the surface, institutional adoption appeared extremely strong. Major financial players entered the market, and large institutions accumulated significant amounts of Bitcoin.
I'll give my thoughts on Kevin Warsh, who I should note, since in the interest of Jane Street-like disclosure, Kevin Warsh is an investor in Bitwise. I don't know him personally, but he is. Yeah. He's part of the cap table. I think the market for Bitcoin initially reacted negatively to Warsh's nomination. And the reason for that is it was a debate between Hassett and Warsh. And between the two of them, Warsh is more constrained on the view of what the Fed's balance sheet should be. Actually, he's more aligned with what Bitcoiners think about the world, which is the Fed shouldn't have this giant runaway balance sheet, that it's a corruption of the institution, right? That's effectively his view. And the funny thing is, because that they like, Bitcoiners almost don't want that view to be at the Fed. They want the Fed to be like this runaway train, right? Because that's good for Bitcoin. Yeah. So there's an irony there that he'll want it to be more constrained. But I think the market is coming around to realize something important, which is Warsh is actually dovish on interest rates. He's a big believer in the AI productivity boom. He's very convincing to his peers. I think he will do a strong job of dramatically lowering interest rates, because I think that's what the Trump administration wants to see, and that aligns with his view on AI and productivity. And then on this other piece where he wants to constrain the Fed's balance sheet, I think he'll face real challenges because of the sort of financing needs of the US government, right? We have this debt that rolls over, we're accumulating more deficit. So even if he wants to dramatically shrink that, I think the pace at which he's able to do that is going to be somewhat constrained. So I think he's going to be actually a great Fed chair for America. I don't think we're going to get runaway Bernanke style treatment of the Federal Reserve. That's probably a good thing. But he won't be able to aggressively shrink that market because of an element of effectively fiscal dominance that he's running into. So I think he's become sort of a net catalyst because it will cut interest rates and he'll be constrained on his ability to shrink the balance sheet. And I think it'll end up being positive for Bitcoin. Look, we know what the Fed does when we face deflationary forces, right? China joining the WTO, good or bad, not talking about that, but them joining the WTO was deflationary for us in the US because we were able to import very cheap goods. And what did we do to respond? We printed money and raised the debt to fill that hole. The economy can't handle deflation, right? In deflation, consumption collapses, and that's very challenging for the economy. So the government's response to significant deflation is going to be to print, to paper it over, and that leads to asset price inflation. And I think that's the inevitable outcome if AI is as disruptive as we're seeing from Block and from others, right? So I think if it is a strong deflationary force, we're going to see money printing on a quantum that we haven't seen before because the government can't handle actual deflation. And that's going to be positive for all scarce assets. Bitcoin, I think gold's going higher. I think other scarce assets are going higher because I do think that a deflationary force is real, and I think the printing response will be equally real. The good thing about being in Bitcoin is you've lived through so many of these things that you're easy to detect what's just complete nonsense and what you have to worry about. I mean, didn't the Financial Times wrote that Bitcoin is worth zero a few months ago? 10 years ago, that would have freaked out the market. Boy. Now we're like, oh my, this poor person. They just can't get their head around it. So I think it's that. I think it's that so many people hate it. They're going to attach everything they can to it. And this won't be the end. There'll be new FUD. Make no mistake, there will be new FUD for Bitcoin. We're in a better place than we were, 15 years ago. A lot more people believe in it, but it can be exhausting, right? It can be exhausting. The perpetual just inability to address it for what it is and treat it rationally. It always does make me feel good when the critics seem crazier than the adherents. And I'm not sure, like there was a while early in Bitcoin where the people who were supporting of it seemed like they were really outside. Now it's the critics that say things that just sound absurd, right? Like it sounds absurd that the Financial Times is saying Bitcoin's going to zero. That this reporter knows more than the Abu Dhabi Sovereign Wealth Fund or Stan Druckenmiller or Ray Dalio or Kevin Warsh or the Harvard Endowment or Morgan Stanley or you or me. Like it's crazy. Yeah, but look, this is the cross we bear on our way to 20x returns. I think we've lost a portion of the attention economy to AI. And look, I'm as interested in AI as the next person, right? I use it all the time. Take some Claude just published some new courses that I think our whole research team is going to use them. That's perfectly fine. But I do think it will become less volatile. And I would add the thing that's not intuitive to people, which is there's less risk. If you talk about something like NVIDIA or OpenAI, there's enormous risk in there, right? Like traditionally chip markets get oversupplied and then prices come down. The chip cycle is notoriously cyclical. Could we see that in AI chips? We absolutely could. These large LLMs are phenomenal businesses, but the open source models are getting really good. Could they significantly disrupt the economics of that? They absolutely could. AI needs almost infinite power to scale. We're not really able to build that power. We'll be able to build AI data centers in space. I have no idea, but apparently we need to if we're going to get the kind of growth, like huge risks. Bitcoin just produces blocks every 10 minutes. And it just seems so simple. So I think both its volatility will shrink because more different investors are coming into the market. But I think also you could argue objectively its volatility is lower because it's just doing what it does. And the trends that you're betting on are things that are almost baked in. You're betting on the world getting more digital, you're betting on governments printing money, and you're betting on young people getting older. Those are pretty good bets. And if all of those line up, I think
safe.
it's great for Bitcoin. I don't know. It seems a lot simpler to me than many other things.
Markets rarely move in straight lines. Even the most transformative assets experience cycles of exuberance, correction, and recovery. But when the noise of daily price movements fades into the background, a deeper pattern becomes visible.